To the Breakfast Club. Yes, we're back. It's August 19th, 2024. We're in the middle of the month. Been a great, interesting summer. A lot of fun with the family, friends, and relatives. It was an awesome time. I hope you guys all had a great time out there. And here we go. We're back at it again. There might be a spotty or on and off kind of running through the rest of July or rest of August here. I have some appointments I can't miss, so I will be seeing you guys intermittently. But in the meantime, I don't expect too many people here because you know who's on the internet right now is ICT. ICT is doing another mentorship for his son, Caleb, and congratulations, Caleb, on your adventure, your new adventure into the fray, as it were. You can catch him on ICT at YouTube here and watch it. And all those people who are just starting out, here's a golden opportunity for you folks to actually get information right from the horse himself, the guy who codified the whole thing. And you can't beat that. And he's doing it for free, and he's redoing his last mentorship for his son. It doesn't cost anything except some time to sit in and watch his videos, and he trades live every day. So you'd be crazy not to be involved in this morning. Every day he's on every morning now doing his show, his mentorship. So instead of spending time with me, that's the guy you need to see. That's the guy you need to talk to. If you're doing this regularly or you want to get into this as a profession, he's the guy you need to get the information directly from. We're all trying to remember the stuff that he's taught over the years. And he's the guy that if you're just starting out, he's the guy to see. So go check him out 9:15 every morning. He's already got 10 videos up there already, or 10 lectures. So he started beginning of the month. So have at it. You guys could get in there and learn by it. All means. He is the guy to see, let me tell you. So, Hadi, good morning. Thank you, Hans. Thank you, sir. Anas, thank you. Thanks, Talk. Lambo. Had to start in and say hello to my brother D. Morning, Lambo. How you doing, buddy? Fernando, good to hear from you, my friend. Yes, we're back. We're back. You guys must have it on notification button or something like that. We lost a few people along the way. I think we had 905, I think, before I left, and we've had people bail on us already, but that's okay. All right, let's get to it. Let's see what we got here. So, as ICT likes to talk about in his new videos, is we look for jagged areas to go to levels at 7 o'clock. You look for here's the 7 o'clock. Here's these relative equal highs. As he talks about in this video, at 7 o'clock, look for jagged edges to be created, and then reach for relative equal highs. And here's the 7 o'clock here. There's the opening bell at 7. And where does it reach for? Right here, these equal highs. We have fair value gap here. I've come back inside this. And if you haven't already figured out, I'm a fair value gap, inversion gap kind of guy. I like to trade fair value gap inversions. So when we see that this low has been taken here, and we've come back into this breaker, so these down close candles, take out this old high right here. Now, if you draw this across, look at this right there. It comes all the way back to the breaker, takes it, breaks above this fair value gap right here. You see it body trades above it. It trades back into it, into the consequent encroachment of that. Or I guess relative, pretty close to the consequent. Anyway, it trades back into it. And then we start to reach for higher highs. So if you're looking for the 7 o'clock to run up there and you need confirmation, there's your confirmation fair value gap. Now it becomes inversion. You come back, find support at it, reach for those highs. Once those highs are taken and this new fair value gap that is formed, you want to see this, this new fair value gap here hold price and continue going higher. So what it's done here is it's held price. We get a little mohawk. Bodies of the candles are still respecting the fair value gap here. We bounce around the consequent encroachment for a while, and then we get a lift off. Take out these relative equal highs, run back up, small little fair value gap right here. We trade below it right here. See how that just trades below it right there? We come back up inside it right here and then run these lows. See how the bodies of the candles are respecting that fair value gap? Look at that inversion. Drive back down, take these equal lows we create, clear those out, make jagged, and then start running for equal highs. There's little equal highs here and the new high up here. Now, if you look at this on the hourly basis, we're in the NQ here. We're looking for these. This is jagged. We've come back down inside this fair value gap, the same kind of thing I just showed you in the 1 minute. And now we're reaching for relative equal highs. So we're looking for this to go higher. So once those old highs are taken out on the hourly, we'll see how much further this extends. We have a whole bunch of goodies up here. These are all back from when I was with you guys last time. So I should probably start eliminating some of these. I should eliminate them all, actually. I'm going to see if they're sensitive. Because Michael says these are definitely points they reach back for. So I'm just going to hold on to this for a bit. And I want to see how much sensitivity they have from like 2 weeks ago when I was talking to you guys. Bitcoin. It's got this big fair value gap sitting right here. We're trading above it. We have equal highs here, jagged, looking for equal highs, relative equal highs to be taken out. So we have a pile of liquidity sitting here and here, fair value gaps, pull the range and see how Bitcoin acts within that. So I'd like to see that level there as a level of interest for now. We're back up inside this breaker here. We'll see if this holds. If this doesn't hold and we get some support off of this, look for this breaker here. Provide a level of support. So we want to see that come back up in here and be anywhere inside here to provide a level of support to continue pushing higher inside that range. And these old highs to be taken. But we need a body to trade above that. Soybeans. What have we got going on with soybeans here? Well, since I left, we had soybeans. I had these numbers here. It didn't quite reach that Inside this range here, we probably hit 50% of that range and rolled over. Creates a fair value gap here. We trade below it. We come back up inside the order block. Last down close candle, small swing here. Last down close candle. It's a mitigation block. We don't take out any previous highs. We trade back to it right here and then continue going lower. So for now, we're going lower in soybeans. Where was I last time? Okay, we're back in July. We're way over here. That's 1 hour chart here. Put this back on the daily. So we were looking for it to trade above this. I think we wanted to see it trade above this. If this was when I was here on July 26th. We wanted to see this get broken to the upside, and then that would be the line in the sand you wanted to see it go higher, and it didn't. It actually broke it, came back, traded inside it, and went lower. That was the sell side liquidity we were looking for. All right, so let me move this around now. We're looking for new sell side liquidity down here. We got relative equal lows right there. That's wheat, sugar, coffee is going to be we got lows below us here, and you got relative equal highs, relative equal lows. So basically you're going to have to wait for one of those to get taken and see if there's a reversal back down to the lower half to take out. We're in the premium side of this right now. We're inside this fair value gap here with coffee. Looks like it wants to run this old high here. Watch the 50% of that wick and keep an eye on that. Pull a fib tool on this wick. Look for 50%, see if that holds price. And you continue to come back into a smaller range. It compresses before it makes a move. Or it just runs these highs, these relative equal highs now. I think back in July, we're looking for this buy-side liquidity to get taken out. It did. Buy-side liquidity was taken. Creates this fair value gap here, which is always what we're looking for anytime an old high is taken out. And we traded below it. We did not get an opportunity to get back to it. You'd have to check on the lower time frames to see if there was an opportunity to get in around here or off of this fair value gap here, this inversion. And then we proceeded to run all the way down, take out the liquidity on the downside, refill this fair value gap or this gap in price here. It's a liquidity void. There's no delivery of price there whatsoever. That would be the downside objective, and we literally ran that out as well. So let me remove that. Now we've just come back into this small range here, back to a consolidation CAM model entry for a continuation on the downside, looking for liquidity below the market and looking for potentially this little fella right here, which is, yes, the discount array. So we're looking for this to continue down into here. That's my next level for live cattle. Good morning, Cheryl. Thank you very much, Cheryl. Thank you. Christoph, good morning. So cocoa, we have a nice little gap, a liquidity voided right here. We'll see if we get a reaction off the bottom of this consolidation here. you know, we'd expect to see this key off of here with this candle and then continue going lower. And now we flattened out. We're coming back up. So if we revisit this fair value gap, I'd like to see this trade through it, come back onto it or into the consequent encroachment of that and continue pushing higher. This breaker, this held price multiple times all the way to the top of it. This breaker here, last down close candle before taking out these old highs. You've come back inside that one. You have overlapping ones there. Fair value gap inversion. Look at that fair value gap, just holding it back. So you want to see that climb on top of that to get higher, right? And it's not. It's held. It did pop up once back, was resisted by this breaker here, and we literally gapped down. Took out the lows. Now you'd expect to see this return back up to these relative equal highs. This is higher resistance from this way. You want to see the right side be higher. You'd want to see this return back into here, then drive up through it. You'd like to see something like this. You want to see that come up to here, here, then make a little run up above. And finally clear out that high. Lumber. Back in July, we had this, we wanted to see it get above that level right there. And it literally gapped up above it, came back to it perfectly, bounced off of it. You see that? So when I was with you last time, in order for us to be bullish, we had to get above this. And we gapped up, literally gapped above it. Came back, found support at that level. And now we're pushing higher. We have these relative equal highs here. So this is the next upside liquidity for lumber. And little piggies came back up inside this imbalance, these imbalances here. We revisited those. The buy side liquidity never got taken in July. We just got to return to the premium array. Now you want to return back down into this. We have a smaller one down in here. So this is where my eye goes here. And then the liquidity below the market here. And what's this? This is gold. Where is gold today? Apparently made new highs while I was gone. Yeah, did it ever? Wow, gold did do a little run. Hey, look at that. We made new highs, $2,500. So on a daily basis, we're still pushing higher. We get a return back to this old high here for this breaker, this little swing here, takes out that high. We get a return to here. I want to see this. I'd like to see that stay open and not fully fill in. Create a fair value gap there. Come back, tap it, go. Continue going higher. Oh, and here's that little stock somebody was looking at back when I was talking about it here. We traded back, we traded below it, came back inside it, went short, all the way back into the consequent encroachment of this. I guess this would be it here, that gap. Let's see if that gap was 50%. Not quite 50%. So lows taken, reversal. All the way inside this little imbalance right here. Bodies respect that. Trade back inside it. Now they've climbed higher. So whoever it was who had that one, I hope they got to enjoy a nice little run back into 50% of that range at least, and started pulling that fib tool on the way down. See how we talked about that as the entry last time, and you're looking for a run 50%, move to break even. You hit 62% right there, move to 50. They would have come back, taking you out, and you would have made all that profit. So that's a quick way to just work that one there. You wouldn't quite have made 70%. They would have taken you out there, but you would have made profit all the way down there. That was a interesting little trade. Anyway, let's get back over here and see what's going on. We have relative equal highs now. Morning, Shepard. Thank you very much, sir. We have relative equal lows below us, and now new relative equal highs above us. 722, so we're coming up for 930. Oh, we'll see what that range begins. We clear out the liquidity, make jagged, run for equal highs. We now have relative equal lows. So a retap of this fair value gap here. And we have a small little breaker right here, clearing out these highs. There you go. See how it tapped it? Right on the 725. So we'll see if that continues to come down deeper into this, or start to take out the relative equal highs above the market. Don't forget, on the hourly, we're still looking for those highs to get taken out. So that's my upside objective. We have relative equal lows down here. And we have a discount array down here again to get revisited. There's a portion here and a portion here. The order block, continue going lower. There's a small little imbalance right here. Once we took those highs out, you can just see it right here. Come back inside it, just trade it above a little bit here. Come back, tap it again right here. Continue for the equal lows. Now for me to start thinking more bullishly, I want to see this breaker get taken out to the upside and this fair value gap right here to get traded above. And then we'll start aiming for that one. Otherwise, we're still going lower. We're retapping this fair value gap again. Consequent encroachment. Relative equal lows down here. And look at this discount array down here. We've already taken that with a couple of handles, maybe one, let's actually 0.25 of a handle. And we're just about to hit 930. So I'm looking for a run down into here. We've got this small pocket of liquidity underneath here. Yeah, the new day opening gap. We just hit the new day opening gap on Friday, the low here at 19,604. So that was the bottom of the new day opening gap was here. We're getting a reaction off of that now. I took a turtle soup here, so we'll see if that works. Got this fair value gap down here again, still too. We have this has been made jagged now down here. And now what we're looking for is a run up here or a continuation. We can get all the way down into here. This is the level I'm looking for here. And we also have the opening range for 956.65, last week's opening range at 56.565. This is last week's opening range high. We came back into the consequent encroachment of that discount array right here. So if these were your objectives, they've now been hit. Perfect fill of it now, right there. You have to ask yourself if these are random levels that are outlined. I think not. So discount array down here, right to the pit. I want to see that stay open now. I want to see that start to run back up. I'm going to move my stop loss now into down into here. I don't want to see this take out this low here. If it trades below here, then we're going for these lows. And we have a break-in structure too. We'll see how this discount array here inside that range. So you have that inversion holds price. I have the new week opening gap at 604 to 628. That's my new week opening gap. Just watch for how this opening range sets itself up. Regular trading hours. This would be our Just have to call that our regular trading hours here. So we came back into 50% of the regular trading hours right here when we opened. Traded right back to 50% of it and continued going lower. Take out these lows. This is just bouncing off that last week's opening gap high. And the opening gap low, I think I have it at 19,504. 1 minute. We'll see how this settles out for the opening range here. Trading hours. Let's see, trade above here now. Use this for leverage to go higher. If relative equal highs above us here, we may get a retapping of this low here at 10 o'clock. I'd like to see that clip that high, find some support at it, continue pushing hard for the 1 hour. We'll see how we get, what kind of reaction we get off this level here. Is Michael on right now? He should be. Morning, Abs. How you doing, buddy? Good morning, Abs. I hope you guys are all getting a chance to check out Michael's new training videos for Caleb, his son. I think it's awesome that Caleb's getting involved in the family biz, which is great. So again, this is our key level for me right here, right now. See how this acts here. Looking for, I think this whole range overall, we're hitting 50% of it already. The liquidity pool is again still sitting up here. I left that trade on. I didn't mess with my stop loss. Still going. So this is my next level up area of interest right here. If we don't take that high up right away, look for this level right here. That box. It can come back quite a ways actually. Anywhere inside that candle. I'd like to see that wick just get touched and then continue going higher. Inversion. This one here. Forget we can come all the way back down into this thing. I want to see that stay open. I would like to see this stay open here and just continue pushing higher now. I want to see this candle here provide support to push higher. Taking these highs out here. I don't want to see it trade below this candle's low, which is basically we could get a retracement in here to push higher for this level. That would make this. See how it's right on 50% there of that small little range we created here. So then I would go to here. That goes. We're still inside that wick candle, high and low. If we break the bottom of that low there, then we're going lower. If we revisit this before 10 and then push higher, I'd like to see these highs get taken, find support at 10 o'clock, and then push higher still. So we're still inside this inversion here. You guys all had a good summer so far? Any major adventures or anything you guys have been on? I popped in every now and then on the Telegram channel to see people still trading, still focusing on their setups, which was awesome to see. I had such a great time with my cousins. They came over from England and we had a great time. We showed them as much about Canada as we could. Return to consolidation. I want to see that get right back up through that new week opening gap again at 66.28. I want to see it break this high here and use the new day opening gap as support to go higher, or new week opening gap to go higher. We're bouncing off the consequent encroaching already. And here, keep pushing us higher. Regular trading hours, we're fully filled now. See that? They're all done. We've rebalanced that regular trading hour gap. Now, if we get some support off of that and start pushing higher, I'd like to see that and these equal highs to get taken. Good morning, Joe Mack. How are you? Is ICT doing a lecture this morning? Let's see if he's in here. Yes, sir, he is. He's doing one live. I hope I'm saying the same thing he's saying. I see he's live there. I don't have headphones on. I'm not listening to him while I'm not passing his knowledge on to you guys. I'm just giving you my point of view, and if it's the same as his, that's awesome. If it's not, listen to him. Came right back to this breaker here. Took those lows out, right back to that breaker. Can we get a drive all the way back down into here? See that? Still looking for these equal highs here. There's that breaker resistance right there. It's what we just hit off of. %50 of this order block right here. That's the mean threshold. We've traded back to this mean threshold here. And get above here. Good. That regular or new week opening gap high is this fair value gap here. You want to see that get taken to the upside and get that support off the new week opening gap to go higher. Again, it changes up for me if we get below here. We've got jagged edges, equal lows taken out. These equal lows here. That low taken, jagged. And we're looking for equal highs. 10 o'clock. And then the hourly is our upside objective. These relative equal highs up here. Even though that's a high resistance liquidity run, you could see this order block here, fair value gap above us. We've now balanced this one. You want to see this one here get, is that balanced? Nope, not quite, just a little short. And you've got this little fair value gap above you here as well. And then high resistance. So look at that wick. We'll take that wick, split it into quarters, and we'll see how that, I'd like to see if 25% of that wick holds resist price and we start coming back down into the range, or whether we clear 50% of that wick and start climbing higher on the hourly. Mean threshold. It traded down, came back into the mean threshold, continue pushing lower. That looks like we want to re-engage this level down here now. This breaker clearing out these highs. Breaker to breaker. All right, we're back in this one here. See, now we've come back to that discount array again, inside that range, optimum trade entry. I want to see this start pushing higher now with some gusto. Some gusto, please. This is a bit choppy, a bit sloppy here, this price action. See you later, Cheryl. This little pocket down here as well. We have relative equal lows below us here too. So before 10 o'clock, while this range is setting itself up, you wait for one side to get taken, which I think we could get a revisit of this at 10 o'clock, and then a final push back up for running higher. We're in the middle of that range relative to this low. We're in the middle. Here's 10 o'clock. We've had jagged, all this taken out here, all the way down. We've created relative equal lows here. And we have relative equal highs above us. And we have the 1 hour relative equal highs above us too. So let's see how this kind of pans out for the hour. They're going to take a run on this liquidity down here. Fill that little fair value gap in there. They've rebalanced that. They're running for this. Come all the way back down to the rejection block. Take this wick here. Just out of curiosity, I want to see how this wick plays out. Look for areas of sensitivity in the wick, because Michael's been teaching a lot of wick theory type stuff lately. So I want to see what kind of reactions we get out of here. So we're kind of studying price action right now and studying where these areas of sensitivity are within wicks. So we're traded through that reversal here. So if you didn't get your best out of that 50, 72%, 60, whatever on the way up inside here, you're underwater here. And now that we've traded through that into the rejection block, bodies of the candles are respecting this fair value gap here. Leave that there as a future study if it comes back to it. Watching right here. A lot of chop going on in here. Not clean price action for sure. You see the difference between this and that? Mitigation block, come back into it, clean, run down. This was nice, run back up to the breaker, and then it starts getting choppy. And we're back to the new week opening gap. And what is the consequent encroachment of that? Six 616. 19,616. So it's around here somewhere. There you go. I've been holding onto this trade here for quite some time. So we're just above the consequent encroachment of the new week opening gap. Relative equal highs here. We have jagged. 3 attempts to get down here. Reversal. Equal highs, and then the hourly. $604, the bottom of this here is the new week opening gap. Low. There's the highs taken there. Still looking for this to continue pushing higher into here. So we want to see again that 19,628. I want to see this little fair value gap here get broken to the upside. We just bounced off of it right now. So we'll see if we continue to work through this level, find some support at it, continue pushing higher. If we come back into here, look for this level, this candle here. Right there. Mean threshold. And I'd like to see that keep going higher now. I guess we can come back all the way into this breaker right here. I want to see this stay open now. Ideally, that would like to be, let's see that stay open as well. %50 of it. Here's that little thing that Michael was talking about the other day, I think. Right here. Are you just short of the 50%? So you don't come back. You have a fair value gap sitting here. You don't get consequent approach when you start pushing higher. I'd like to see that stay open like that now. Now that I've said it, it'll come back and take it. This is a lot of chop here to be involved in. I tell you, it's definitely a challenge. So we're through this. Now I'm going to see if this little level right here. So I'm going to get rid of this one here. I'm just going to put this here now. That becomes the level of interest for me. If we drop below that and come back into it, then we're looking for a further run back down into this range here. And then my eye goes into the discount portion, which is right here and here. So if I move this guy over here now. So this is important for me to see this stay open. Now that we've come back and wicked into it, I want to see the bodies continue to respect that and push higher. If not, we're coming back into this range, and the potential is to run back into this discount level here. You see how you can get beat up on a Monday? I'm just going to let Monday settle itself out. Yeah. So we're looking where I'm looking for down here, this level of sensitivity here now. There is a fair value gap in here, and we're looking at 50% of that range. $60. We're digging right into that. Oh, we've already dug through that already. Get rid of that one. Let's see where the bodies end up on this one. We're below. We're right near the bottom of that now. Fair value gap down here is the discount portion. We might get to revisit our little study of this wick here. Now we got some relative equal lows. What time we're looking at? 10:18. See these low get taken here. It's the opening range high. Pushing lower. $504. $525. On the 15-minute, we have a 19,526. $503 to that'll be my area of interest on the downside now. One, two, 19,513. 19,513, which is the top of that. Very interesting enough. So if we get back above this fair value gap here, I'd like to see that clear above here and then start running for these highs again. Now that we've swept the lows at 10 o'clock, or at 9:30, we swept them for 10, create the, where's there, 10:08. I'm looking for a silver bullet here. That's really never been hit. Lows are taken. Yeah, this becomes the swing trade right here to run back up into that range there. So I'd be looking for something, and enter. The ideal entry would be right here. If we close above that first, come back. Ideal entry would be there to go long. You want to see this stay open. You can come back to the consequent encroachment of it, but the rest of it you want to see stay open, and then you want to see that push back up and get above this level right here to take those highs. If it clears this level here on a close, then we're looking for these highs next. What level's 15 or 19,529? Rejection block right there. See that? Nice. Pay yourself at rejection blocks. So this one here now becomes my next level of interest. I want to see us eat through this here, find support at this, which is also through the consequent encroachment of this fair value gap here, and start climbing up on top of it. This inversion here, you want to see it get on top of that, start climbing higher, and then clear that little guy right there. If we come back, find support at this, that's fine. This is the swing. Come back, find support anywhere inside here, and then start pushing higher. I don't want to see it drop below here and start coming back into this fair value gap below me here. Get some legs now, start climbing. From there, now start running. That's it. I keep seeing that push higher now. Oh, you want to see this kind of explode through here now. Start really driving through all of this. Start reaching for these highs now with some gusto, some energy. You didn't know it was on? See how we've closed above here now? I like that. That gives me more indication for higher prices. Now we've cleared out this fair value gap here. I literally closed on it, opened on it, dipped into the consequent encroachment, and then start running higher. So I want to see this one here now continue to provide support and push higher. So Tim, this is kind of like what we were talking about before on the Telegram channel about the inversions and how you're starting to see how inversions are something that are the bee's knees. Michael talked about it, and I even have it in my book, listening to his lecture. I think it was the third lecture at 43 minutes. He was talking about if you have the patience to wait for inversions, they are golden. And then he goes on to talk about how I know a lot of my stuff is all really good, but that inversion fair value gaps, if you wait for them, are just primo levels of support. So we look for these inversions. So I literally love trading inversions and like to like arrays. So these inversions here, where I like to see some support off of them. So we're seeing these inversions hold price. You have equal highs above us. You have the new week opening gap above us at 628. So again, through here, I want to see this provide some support to go higher. And the consequent encroachment is 616. So we're hitting, banging off of that right now, right there. Now retail might look at this as support. We've made all this jagged down here now. All of this has been taken. We've had a reversal pattern set up. We didn't quite get an opportunity to get in that, but we were watching that one. We see it get above our level here, then trade back into it, find some support. We talked about that, and we talked about this level here. And look at how sensitive it's becoming. So you can see how this is a very sloppy price action. It can be pretty sloppy, but you can still read it. It just becomes how patient are you to hold on to your convictions and be prepared to change your mind once price action shows you that it's going in a different direction. We talked about this taking us out on the run back up this morning. We were talking about the potential for it to come back down and take out that low. And it finally did. Now we finally got these highs taken. So that level I talked about there, look at that. Super sensitive. We finally got the highs taken. Now we're looking for these highs to go. And I'm going to start locking in some profits finally here now. I've been weathering this for quite some time. Now I'm locking in profits. So we just went up to the new week opening gap, took those highs out, and I closed my trade out of here. Now we're going to sit. Now I've had to weather all this. I've made a chunk of profit. So now I'm going to let that sit and wait. You still got these highs to get taken. But we have here, so we could get this again, another big dip back down into this range. So where could we be aiming for? We're looking for here and this level again. So if we break through this on the downside, look for this level here. 50% of that range. Pull your fib tool from here to here. So watch this level here now. Just watch as we have a potential to run back into this range. I want to see this continue climbing higher now. So let's say it doesn't. So we've got this. This is my next area of interest right here. That one gives us support. That's my next area of interest now that we've taken out that high. And then we're looking at 50% of this range. I'll start drawing the levels that I like that are sensitive to me. Oh, it's right back into this one again. Right at 50% there. So if we close below this, come back, find support at it. I'm looking for that level next right there. And then a dig into this. Still finding support at that level. See how the bodies are respecting it? The wicks just keep coming down into it. Now for me in this range, this level is the next important level. If that one still holds, great. If not, this is my support here to go. Are we aiming for this guy here? And that little rejection block right there. That's 50% of that range. So if we do get a retracement in here before finally pushing higher to take these highs out, the ideal entry would be right here. And you want to see that stay open. Well, it did stay open for that high, those equal highs. So that's done. I want to see this stay open to remain bullish. I want to see this level stay open. If we close below that, then we're looking for potential fill of this fair value gap. And then that line in the sand is the main threshold here. There's a tiny little imbalance right down in here. So now we're dipping further and further. See how that we're reacting off of this level here? That's the, am I going to get support here and keep going higher? Or is it give way? You might keep your peepers on that little thing right there. Giving us nice laser precision support right now. We're back up to that order block right here. If we clear through here now, look for some retracement back into this fair value gap, because now it becomes inversion. This is just retesting the order. You see here? See how the bodies are still respecting this one here? The wicks are doing the damage. So let's see if this trades through here. Nice. So now we're digging through it. See if the body closes here now. And if we just get a big, solid, quick run down into this discount right here and the 50%. I don't want to see that get taken yet. For a little 10 handles or whatever it is, you'd like to see that close below here, come back up. Because right now all they're doing is, see how it's now sitting close below this one. So we find some support at this and continue to come lower. If we get on top of this candle, then I'm looking for it to go higher. So smaller range from here to here, 75%. Going higher now. You want to see this guy get a level of support now and start pushing. We're back to that guy. So we're between here and here right now. We lose the 50% of that. We've now come back, find support at this, and I want to see that keep pushing higher through this candle here now. See how we're still finding support off of here? The bodies are respecting it. We have no body traded below this here yet. That'll keep allowing us to keep getting some support here, like the rock climber. You climb up and you get above this level, find support at it, push higher. If we slip, then we're looking to fall back to the next level, which is this candle and the mean threshold of that candle, or 50% of the larger range here. Because now you extend past this one and reach in for the next swing down here. This would be fun to review Michael's interpretation of this. Let's see how close I am to what he's been saying. Get to review that later on tonight and see how we're doing. Right now we're sitting in the middle of the weekly fair value, weekly new week opening gap, the consequent encroachment. Like that's just literally banging off the new week opening gap. Consequent encroachment, the lower half. That lower half of that gap's really been worked today. And we've only made one attempt to get through the upper portion of it here. Still finding support at this level. It's a good thing. Look for this level here again. I want to see it get above that. Start pushing higher. The bodies come right back up, right into the consequent encroachment of it, find some sensitivity. Closed on the low, opened on the low, and I think we're looking to re-engage this candle here. We'll see if this stays open. I'd like to see that stay open. Oops. Let's lock that in right now. This is not. Flash at my eye or something there. See how this reacts here. So I'm looking for these highs again. These equal highs up here. I'm just going to move moving my stop loss. Highs taken. Move my stop loss some more, moving into profit and let that run now. I'm just taking those highs, so I want to make sure I maximize my profits. So instead of taking a little piece off there, I've had 2 profitable runs today, so I'm not taking any losses here. Just run that high. I'm looking for the hourly high as well. Let's see what this goes. So we're through the top of the new week opening gap, looking to go higher. Thanks for the 6 of you who stuck around so far to see the highs finally get taken. My prediction to come to light after we took that 10 o'clock low. We've talked about all the support you can find off of this inversion, and then that Monday open, find support at it. We talked about support here, talked about support here, and now we're looking to go higher. So we'll see if that hourly high comes to fruition, and then that'll be it for me this morning. And hopefully Michael was saying something similar to what I was saying. Because if he did, then yahoo, yay me. If not, then listen to Michael. So far we're getting the same result if he's calling this higher for today after taking this low. And those old highs, jagged, reaching for break for those equal highs. And then the next equal highs will be up in the hourly. Right there. $6.90, that's where my profit's going to be. Take profit at 6.90. And just so you can see, that trade is continuing, just so you know. Not that it's I'm looking for anybody's approval or anything, but I do have a trade on there. We can see that come all the way back down into this old high here. Revisit that. Now that we've got this, this is where my curiosity goes now. I'm always looking for these spots like this. I'm looking for these. Oh man, I got a lash in my eye. Anytime we take an old high out, I look for this to happen. So now we've traded below it. You look for some support and you're going to come back into this range here. We have a breaker sitting right here. Equal highs. See how they've come back and tapped it? Now, in order for this to be the bear trap, we want to trade above this, come back, find support at it. If not, this is the bear. Run down into this range. So look for here. There. Let's see what kind of reactions we get out of that. So you'd expect to see this continue to come down a bit more now. 50% sitting right down below you. Who do we got in here? Campion 1, 2, 3, 4, 5. Does the fair value gap at 107 and the opposing fair value gap at 1016 create an inversion fair value gap? And this one, which one are you looking at? 1016. 207. So no, if an inversion would be if this fair value gap here, if we trade through it, right here, we trade through it and trade back into it, it becomes an inversion. Same as this one here. This is a SIBI. When we trade through it on a body, this is just trading back into the fair value gap. It becomes an inversion when you get on top of it like that, and then you start finding support at it, championing, and start moving higher. That's the difference between a fair value gap, SIBI, build, when you trade above it and trade back into it again on the top, not just trading into it like this. This is just reclaiming that, returning to the fair value gap. You're just reclaiming it over and over and over again. It's not you trade through it, come back on top of it, that you find it, this becomes the fair value gap. It's not two fair value gaps in a row that become inversion. It's this guy here. When you trade through it, come back to it, then it becomes inversion. Hopefully that helps. You see there's that, now we're trading above this one here. This here now becomes the fair value gap. Inversion, we come back, find a little support at it, and start pushing higher. We didn't quite get to 50% of that range. We got a little bit of a body traded below it here. See that? And then we quickly traded back through it. That's the trap you can get trapped in. That's why I like to see these breakers. If you have this, let's say this was the fair value gap, there wasn't one here, and you traded through this one and through the breaker and back into it, then I'd find more confidence in holding this fair value gap inside the breaker as a continuation on the downside. Otherwise, that little support, see how we traded above it? We talked about that before it happened. If we trade above it, it becomes the trap those guys in, thinking you're going to go low. And now you want to see this push higher. You're welcome. These inversions are such great opportunities, Campion, to if you watch them, how sensitive they can be. Like this is just a fair value gap that was not filled. It came back, tapped it. They provide a level of sensitivity. But once you get through them with a close, then they become key levels of support, unless you have a breaker sitting right here. See that breaker? These two candles here to create this run down below these lows, that's the breaker. You see how this fair value gap here, we poke through it, but we don't have a body trade below it. Then we have a body that trades through it, and then we start to dig right through that breaker. See that? And then we trade above the breaker. Now, when we return to this breaker again, you find support, you can go higher. Watch where the crosshairs come there, and look where we hit. Right off that breaker right there. And I called this a while ago when we had this run up. We're looking for that level. And look at that. Return right to it beautifully and pushing higher. This is that false little dip below. You break above, come back, find support, the consequent encroachment. And now you want to see this continue driving higher. Take that high out now. Now that high's taken. You see that? Just popped above it. Now you want to see it continue driving higher because we're looking for the hourly equal highs at 6.9 something. We've got a profit at 6.9. What's the hourly? 6.90. So let's do this. Let's do this because let's go to the hourly now, and I want to show you. This is what Michael's been trying to show us about this wick. Let's take this wick here, and let's do this. And I want to study this one because this is what he's been sharing with us lately is this wick theory, or this wick stuff. I know he's been talking about it for a long time, but he's really started digging more into it in this new mentorship. So for me, this is I'm putting a little more of an eye on his wicks. I'm going to start to study the wicks more clearer. So I suggest you all do the same thing. The man doesn't give out information willy-nilly. He's helping his youngest son out here, so this is a great opportunity to learn, even for us guys who've been in this since we first started a mentorship back in 2016. Open now and start climbing higher. Let me get rid of this one. Excellent. I'm just going to put my profit in here. Take profit. So again, my goal is right here. That's my finish of my trade for the day. And then I'm done. And I will see you guys tomorrow. Just waiting for that level to get hit. Came back to this little imbalance right here. My eyes go here now. There's 50% of that range of that wick, of the hourly wick there. And you just want to see that just continue working its way through that now. See that 11 o'clock, this 11 o'clock run now, take out those highs at on the 1 hour and then pull back into the range. If it closes below here, then we're going lower. We're coming back into that range beforehand, and then we're going to make a run there after lunch. Or we'll run for those highs after lunch. Yeah, we're going to come back into this range. We take that low out. Look for 50% of this range that was created between there and 9:30 open. With a 10 o'clock low there. I'm looking for anywhere inside that range. So come back, find support at it. Comes a key level. %50 of that wick. See how we've got the bodies working 50% of that hourly wick. We popped up a little higher, but the bodies are respecting the 50% of that wick level. And now we're getting a retracement. We're at 11 o'clock. We should usually get about a 50 to 62% retracement back into the range that we created. And then the drive up at lunchtime will take out that high and the other high. That's my guesstimation on that. So we'll see if we get a nice retracement in here. Again, if we trade back above this, this is a key level for me. So if I trade above it, I'd support, go higher. Trade below it, come back inside it, go shorter. That's the inversion. And ideally you want to see it hit this level here and go through it to go deeper into this range. If not, look for that level right there. New week opening high again was 28. So we worked all the way into here. We want to see this push through here, get on the other side of this and start pushing lower. Come back, find some support at that. See that? Right back to it. Inversions. See how important inversions can be? Now keep your eye on this whole range here. And maybe just cancel that. This one's going to go to retracement. Oh, we got that. I might have the. I want to do 50% of the whole range for the morning. So next one is here, 70%. Next one here is 50%. This next larger range here. So basically what you're looking for now is, now that you've taken out this low here, you look for these little, the small little fair value gap you see in here. You look for it to get taken to the upside. Like that. I'm just going to move this one into a different color, so you can get a different feel for it here. I'm going to go with that color there. We want to see if we get above here on a close. There. Through the imbalance. Now I want to watch this level right here. We just came down to take out these lows, fill this fair value gap in here, retouch an old high. Now we're looking to, are you going to go higher? So we come back inside that right little guy right there. Imbalance. If we close below it again, then looking for lower prices again. Watch to see if the wick does the damage. You want to see it in 16 seconds remain above that level. Came back, retap this little imbalance down here one more time. Now we're above it, see that? So now do we continue to push lower? I don't like this constant tap of this here. I want to see this get some legs now and get out of here. This has worked this enough for me. So I'd expect to see this climb higher, or wait on an idea. I would like to see that these two candles get taken to the upside before I find a more support on going longer if we continue to dick around down in here. So that's what I want to see, is start running up higher now, not just lingering here. There you go. That's what you want to see. want to see the push higher now through here. Excellent. Maybe some balances here. Now you want to see it get above here, not just sit on that. You want to see it get above here, not just come back and retap it and go shorter. I just want to see this high get taken now, and hopefully stick around to see this high get taken, and that'll be it for me for the day. And thank you for 11 of you sticking around for my show today. I know you've got the Grandmaster Trader out there teaching today, so I can understand why people aren't going to pop in and see. But that's okay. It's all good. Go with that guy. Go with ICT. He's the guy we're all trying to emulate here. So hopefully I've been pretty close to what he's been reading today. It's still going in the direction I want it to go in. So I'm sure he's been calling it in the same direction. I'm going to be interested to see when I go back and listen to his video tonight how close my analysis was to his analysis, and were the key levels I was looking at the same levels he was looking at. So I'm kind of excited about that. It's the double check. Sometimes you just need confirmation from the boss whether or not you're on the right track, you're thinking the right way, you're talking the right way. I figured I'd come in here and call it live for you folks and see if I'm close to calling it the way he does. And we're just, see how we're just closing on that. There's a little fair value gap in here. This little guy in here. I want to see it get above this and this. Keep popping up. And do a close above that level. I'll get a half hour more with you, and then I'm going to go spend some time with my family. Check, see if I got any emails here. This has been a long, arduous journey to this, the top of the hourly equal highs this morning. It's been a bit of a choppy session. And this is what high resistance liquidity runs feel like when you're in them. You can see how you can get chopped around inside that. So I need to lose this to go lower. I need to lose that level. This just tells me we're trading back inside here. Watch this level here. You're doing a great job. I like the way you explain it. Keep it up. Thanks, Joe. Appreciate it, man. Agree with you, Mac. I like Darren's approach. Thank you, champion. Have you guys been listening to ICT at all? Is it all? Does it all make sense to you guys? I want to see this just give a level of support here and just pop off of here. Because this becomes the breaker now, right? We've broken these guys here who are going short. We've broken them to the upside. You want to come back, find support inside this breaker and start pushing higher. And you want to start getting through this candle's mean threshold. See how that's the swing point there? So the last down close candle, this one's the most sensitive and it's actually inside that one as well. So we come back to it right here. And now you want to see this start really climbing out of here now. And you want to see it this level. So you're looking at this wick here. So you take Michael's wick theory here. And we'll see if what happens at the 50% of that wick. I want to see it trade through that wick. There you go. Now the body right here. That's an area of sensitivity. Right there, see how it hit it? Sensitive, doesn't matter, let it tap it. You want to see it drive through it again. And you want to see this next level, which will be about here. I'll leave my crosshairs on there. Let's see what kind of reaction. I want to see this just run right through it. But if it taps it, let's see what happens here. Right where my crosshairs are there right now, we'll see if that kind of level of support that provides us, if it does. If not, we've got this candle here. It's high. Mean threshold is the line in the sand for that. There. So you're looking right here and here. Okay, watch right here. And we're back inside this guy again. Talk about a choppy, sloppy price action, hey? How do you enjoy your Monday trading? So you're going breaker, ran down, took out that low, breaker, took out that high, if this, so we're fighting between this guy and this guy. Watch the areas of sensitivity here, here, and here. Yes, I like Michael, but he wears me out, so I like the way you're explaining it. Thank you. Oh, you're welcome. There's that level right there. See how you smack off of it and find a level of sensitivity at it? Now there's the mean threshold. That's the line in the sand. I guess technically it's not. This would be the line in the sand here. But I don't want to see it come all the way down there. So that order block hold price would be nice. Watch the bodies. So it came down, tapped it right there. Yeah, it's eating through it now. So we're looking for this line in the sand here in that range. I don't see a premium other than this reprice rebalance here. So that would be technically a fair value gap. If you look at a reprice rebalance, look it up on the ICT index. You'll know what a reprice rebalance is like, creating a fair value gap here. Body trades below it, trade back up inside it right there, continue short. There's the hint that we're going lower. You break through the mean threshold of that candle, then you're going lower. Where are we aiming for? Discount array, premium array, discount array. So you don't want to see it get through here. Now it could be just coming right back up into there, tap that, and then turn around, come all the way back down again. I want to see that just come down to the rejection block. 50% of the rejection block. Look at that. Boom. And now start pushing through this again. We're in such a tight little consolidation here. 50% of the wick holds price. And then you want to see it drive up through here and not start revisiting that low again. So this candle's been validated by that wick. We want to see a body initially, but a wick still validates it. So now I'm looking at the mean threshold of that candle. Does it hold price? And are we sitting on top of what is this thing here? I don't know what that level is there. So now you see how we've come back. We've traded below this, come back inside that candle, that fair value gap. Inversion again. You see why inversions work so well? They provide a level of support to go lower. They provide a level of support should to go higher, provided we want to get to a higher range. There's that breaker we talked about, the level here. Then the mean threshold didn't hit the mean threshold. I should have talked about this here, but let's just see what happens. Now this rejection block keeps getting hit. Mean threshold. Yeah, it's eating through this one. I'd be surprised if that holds now. Look right here. Now you see how it's compressing here? It goes from here to here, and it starts to shrink, compress, compress, and now it's got to blow out of here. And we're getting up to lunch hour. So you want to see this high get taken out for lunch and then pull back into the range. We may see this get revisited down here, back to the new week opening gap. That's the new week opening gap. So see lunchtime run this high. And then you want to see I'd like to see lunch take out that high. The 1916, this high right here. I'd like to see it take that high out. And then return into the range. So 15 more minutes with you. We'll see if we get there. Beginning of lunch hour. Watch that level. Because there's nothing else really in here. Maybe a little tiny one in here. If I stretch this out, you'll see it. And I'll take this. Ideally, I want to see it get above that level. Go above there. But inside this little fella right here is this guy. We've traded above him. Watch here and there. And then the next one is right here. We're inside this range here, so we have a discount array somewhere around the equilibrium of that range, and this one right up here. There's the consequent encroachment. That's the reprice rebalance I was telling you about. It'll go from the opening price to the high. That's a immediate rebalance. So that's classified as a fair value gap there. So that would be the premium array you want to get on top of to get higher. That's the one you're looking to get above. There you go. Now I'm going to take this one out of here now. And we're just relying on that one and this guy right here. Go higher. Now you want the body to close above this right here. Not just wick up there. Back into the rejection block again. So that's the level you want to see provide support now to the level. This is the rock climbing thing Michael talks about, right? So you've got, we don't have an inversion or we don't have a swing here, right? This one did not take out that low. So this is just an inversion fair value gap without a swing. This is a swing right here, swing with an inversion. A lot stronger to start running for a deeper run into the range or take out the highs. Okay, so when you're looking for these lows that are taken out, this inversion, that becomes a swing inversion. This is just an inversion because it does not, well, it's a swing and an inversion makes it stronger to go higher. It's not called a swing inversion. It's still an inversion, but it's after a swing. It makes it a stronger likelihood that we're going to come back into the range. When you have this open here where we didn't take out the low and that inversion, we want to see that continue pushing higher now and start reaching for the one above it. So if you're inside this range, you're looking at premium or discount level and premium level inside a range, you want the premium level to get taken out and go back up. We're not. We're just coming back up, wicking into it, into the rejection block, coming back into this range. So I want to see this provide support. If it doesn't provide support and gives way, then we're looking for this low to get taken out and a run back into this level here. So this really has to provide support for us now. And you literally watch your inversions and you see where they are inside these short little ranges, and that's where you want to say, is this inversion going to hold price inside this range? If not, we're going to extend the range further down. If it does, if this one here, the premium range, gives way, then we know we're probably looking for an extension of this range further or higher. And if this one gives way, then we're looking for an extension of the range lower, because it's in the discount array, or the discount portion of that larger range that we're working in, if that makes sense. This thing's really compressing now. If this doesn't take this out for lunch, and we run all the way down and take out liquidity down in here, and that's the afternoon target, I'd like to see that, take that out, and then come back down. But what I like to see and what's going to actually happen are maybe two different things here. We're above it now. Coming back, find support at it, and start pushing higher. Yahoo, my friends, Yahoo. Let's go. Come on, give me my level so I can leave here with one of those, what do they call that? Mic drop moments. Can I get me a mic drop moment? Just ran those highs out, so pay yourself at those highs if you haven't already done so. And the last bit of profit. Oh, who's this? I'll be right there. I got a couple more minutes and I'm done. We're still looking for that high. You got me for 7 more minutes. Let's go. Let's get it there. Let's make it happen, folks. Let's make it happen. Let's motivate that algorithm. Germ on that. Oh, what we need. You know what we need. What we need, my friends, is one of these guys. Remember these? The old carrot. Little carrot love. That's all it needs. So now that we've taken that high out, again, always be cautious. Be cautious, folks, right there. Watch that guy. You start trading below him and trading back into him. Watch for this range here, 50%, so on and so forth. So you want to see that provide support right now and start moving higher. And see how we're just kind of finding these fair value gaps and inversions and seeing if they provide support for us, if they don't. Because if they don't, then it tells us a story that we look back into the range that they're playing in and saying, are they going to run back deeper into this range? See, that's why you keep an eye on them things, because once you have highs that are taken, you look for this. Now, if it runs all the way through this candle here and back into it, that provides the breaker, and it's inside these two here. So look at this fella right here, or these two that broke those candles high. So if we break them, come back in, find support of them, we're looking for a run down below these lows. The lunch hour, I still think that's going to go higher. But right now, it's telling me it's going lower. Just because we've taken a high, fair value gap, now becomes inversion with a swing like this, level of support. Now you want to see that come lower. Now you watch if it takes this one out on a close and you come back inside that big wick candle there, like that. You see that? See how it can quickly change on you? Because you got to watch this. That's why you pay yourself at that high. Yeah, we're aiming for this, but you pay yourself at the high, and then your stop loss is moved accordingly, and you watch. If you've learned about my fail safe, if you have a fail safe, it would be sitting right there, and if it fails, it would have taken you out there. You got in here, you got out there, you paid yourself there as well. You see this? See the body trades below it? We come back into it right there, and boom. So this, we were calling this, if a body trades below it right there, and it did, comes back, trades to it, and goes short. We're calling this candle, after we saw this, we were calling this, it happens, did exactly what we said, and then finally took these lows out here through this candle. So I took my profits there and actually closed out my trade. I was going to leave a piece on for the end, but it was only a couple of bucks. It wasn't a lot, folks. It's a really choppy market, so we're going to continue down now. Now look for a run down into that lunch hour. That's a fill of that fair value gap there. That's the new week opening gap we dipped into again, and we're looking for that 1616 down here is the consequent encroachment of the new week opening gap. If we just came back to new week opening gap, tapped it, and we're leaving Dodge to go higher, that's enough to throw people off. All those people who are wanting this to go higher, they just got taken out on the downside here. And there was your hint that always keep, and you've heard me say this many, many times, whenever you see a high taken and you see this happen, be cautious. If you trade below it, then we're looking for a potential reversal. And then if you decide to get out as a result of that, and you say, well, I want to get back in on this guy, that's the breaker. We talked about the breaker, came back to it right there, literally clipped it, and then left, ran for the lows. So all that was a good indication. You could still see it, even though it turned on us, we could still see. I gave you the warning before it as it was happening, before it happened, and then the reversal right there. So you could have if you would have took a loss right there, you were hoping to go there and you took a loss, you could have kept back on there at 657 for that low, 632. That's 25 handles. And if you were to come back and just let it ride all the way down to the fair value up fill, that's 37 handles. So now this low's been taken, you look for this. Same thing we did here, you look here. So now you see that this pocket of cash been taken out. That's my next area of interest. So you just keep doing this over and over, rinse and repeat. Look for these levels to get taken. If it doesn't, and this low gets taken, you look for the next one of these appearing on the on this side that gets taken, find support at it to start working back inside this larger range here now. So looking for 616. I'm going to put this at 616. That's the consequent encroachment of the new week opening gap. See you later, Joe. I'm out of here now too. So keep your eyes here. Those lows, reach down, take them out one more time. Look for the consequent encroachment. See if that new week opening gap holds price again to go for another run up. Otherwise, lunch hour, look for a continuation of a run on the liquidity down here and back into this range right here. Look for a run back down into here and then take up those old highs again after lunch. Anyway, I hope you guys enjoyed it. Thanks for those of you who stuck around for my show today. I appreciate it. I will see you guys again tomorrow morning at 7 o'clock Canada time, which is like 10 o'clock, 9 o'clock New York time. So thanks for tuning in, and I will see you again tomorrow. See you.